find our research in the past eliminates several findings that we have found with our childcare business owners that we work with every day. Now, 83% of home-based childcare providers did not claim the business use of home at all. Now, the IRS does allow for this deduction on your Schedule C, line 30, for business use of home. Now, you can take deductions associated with those costs. However, we found that 83% did not claim those expenses. Now, in some cases, providers did not claim any expenses on their tax return. This should never happen, as every dollar is important to reinvest in your childcare program. And undoubtedly, providers have deductible expenses required to operate. So there should never be an instance where a provider is unable to find or claim expenses that are associated with their childcare operations. Now, the IRS Schedule C has many expense categories under which deductions can fall. We encourage you to review each category to identify qualifying expenses so you can lower your tax liability. Also, many providers were claiming invalid business expenses, drastically increasing their chances of an expensive, time consuming IRS audit. Now, while we advocate claiming valid expenses, the key word there is valid. Not all will be valid for your childcare business. Some expenses automatically trigger audits by raising red flags. A rule of thumb: the IRS considers a valid deduction to be what we call ordinary and necessary, which requires for which are those things that are required for operating your business. The IRS evaluates if expenses are appropriate based on your business type by reviewing your tax returns. One other key finding that was that several common deductions were often miscategorized or improperly calculated. Now, when this happens, it can raise an automatic audit alert, even if the deductions are valid. Now, an example of those deductions would be children's meals. It was found that many childcare providers were deducting children's meals using the line on the Schedule C for deductible business meals. However, the IRS intends to use this line for providing business meals when traveling, not for the children's meals. So, high expenses in the wrong category may also prompt an audit, even if it was unintentional. Please remember that if you have questions, go ahead and chat them in the chat. Now, there are a number of different tax forms. The income for a sole proprietor is reported on a Schedule C. And this is part of your personal 1040 tax returns. Now, if you have more than one business um, that are not closely related in nature, then you're going to need more than one Schedule C. Now, here's an example. If you have, say, a craft business on Etsy, and maybe you drive for Uber or Lyft, you are going to fill out two Schedule C forms. Now, when completing your Schedule C, you first report your revenue, which is all the money you receive from your business. You will then show all of your expenses, which are the things that you pay to keep your business running. And then you're going to calculate the amount that remains. If it is positive, you made a profit. And if it's negative, you had a loss. Excuse me, 1 second. So let's take a closer look at the Schedule C. Yes, so. Okay. Let's take a look at the Schedule C to view the different sections for reporting data on your business. Now, if you use tax software, It will either, you will enter these numbers based on your answers to certain questions, but it can still be helpful to know your way around this important tax document. So, part one, this is where your sales are totaled and your cost of goods sold is reported so you can see your gross profit. Part two is where your business expenses are reported. There are over a dozen categories listed to help you stay organized, such as advertising, car and truck expenses, legal and professional services, rent, travel and meal expenses, and various other costs. Now, the last section is where your net profit is calculated on line 31 by subtracting your total expenses in part two from the total revenue in part one. Your net profit is considered your income from self employment. Now, let's switch gears a little bit and discuss how you can proactively prepare for tax season to avoid headaches down the road, as proper preparation is the key to helping you tackle tax time like a pro. Now, this workbook is from the organization Homegrown, and it aims to help home based childcare providers optimize their preparation process and maximize deductions. It covers key topics like record keeping best practices to implement now, such as tracking income, expenses, mileage, and business use of home. It also covers understanding the Schedule C and where to capture income and the different types of business expenses, or how the business use of home deduction works, including calculating and documenting the time space percentage. It covers maximizing write offs with eligible deductions for supplies, meals, utilities, repairs, insurance, and more. It also covers tracking and claiming automobile mileage for business travel, covers depreciating assets like equipment and furnishings over time, uh, taking advantage of qualified business income, uh, 20% pass through deduction. Also, choosing the right business structure, such as an LLC versus a sole proprietorship, and proactive tax planning steps to take this year to maximize your net year's return. Now, the workbook includes checklists, guides, and visual examples that walk through every step to support home based childcare providers in preparing for tax season by providing those actionable steps business owners can implement now to make tax time a little bit easier and save money. Now, we do work with Homegrown to update their tax preparation workbook annually. Now, the 2023 version is up on their site and it is available in English and Spanish. I believe that that has or will be dropped into the chat. Let me open up my chat and bring it over so I can see it a little bit better. Okay. All right. And we will be dropping additional resources in the chat as we go along. So when it comes to understanding your taxes, you'll find it's all about what you made and what you spent. So let's talk about that. The first section of your taxes is all about revenue. That is how much money you made. Now, getting this information may be easy if you have an accounting system. If not, no worries. You can use the revenue worksheet, which we will show to calculate that. Now, you want to start by gathering your records. You are likely to have three types of records for revenue. First is 1099 forms. Now, these are the evidence that another business paid you for services. Many home based childcare businesses will receive a 1099 NEC for maybe the subsidy care payments and for participation in the food program or CACFB. Now, you will also receive a 1099-K if you receive more than $600 in business payments from apps like Square, Zelle, or PayPal. The second form is bank records showing additional funds that you may have received from other sources. And then the third is your own documents, such as year end or weekly receipts that show parents paid for care. So you're going to fill out a revenue worksheet. Now, this sample is from the Homegrown Workbook. A link is to the digital version, can be found on page 7. Um, and I believe we've also added that in the chat for you. Now, included in each 1099 and revenue for each child you serve. Also, there's going to be a uh, list other income such as grants that may not already be accounted for on the 1099. Now, if you receive reimbursement for food costs through the food program or the child and adult care food program, you can report all the reimbursement under the income section on part 1 of the Schedule C using that 1099 that you received. And you can then deduct your food expenses in full in the expense section. All right. Now that you have your business income, you will need to collect your expenses. Now, this will be what you spent your money on for the business in the prior year. So make sure that you have records of your cost, ideally receipts showing payments for expenses, but you can also, in most cases, use canceled checks, invoices, or credit card and bank records. Now, it is critical that any proof of expense show the following. One, that you paid the expense. Next, that the amount, it should show the amount that you paid. It should show the date you paid it, and it should also have a description of the item purchased or the services received. Now, the mileage log included as a resource in the guide, which is on page 27, and shared via the Google link or the links that we will provide for you, is a simple log that you can use to fill in your vehicle use information. Now, to collect all of your expenses, you will want to start by collecting all your receipts. Next, go month by month in your records for 2023 so that you can review your credit card bills, check app-based systems such as Venmo, Zelle, PayPal, or Square Cash, and look at your bank statements and checks. Now, with your accumulated expenses, you can now fill out the digital expense worksheet included in the guide. You can find that on page 10 and one on the Google Sheet tab. Now, the worksheet uses the expenses categories for the Schedule C that are the most relevant to home-based childcare businesses, but they can also use or be used for any corporate partnership tax returns as well. Now, the full amount of home expenses that are directly related to your business can be included in your expenses in the table shown on the screen. The IRS defines a direct expense as one that is incurred exclusively for the business and provides no personal benefit. Now, some examples of direct expenses in your home are maybe fixing a bathroom used only by the children, getting a new children's rug for the play area, and playground equipment. Indirect costs, however, associated with your home, such as your homeowner's insurance or your electric costs, those will be covered in the following section, which covers your business use of home. Now, you should keep all pay stubs during tax season and at least 4 years afterwards. Now, it's great to have paper and electronic copies, even if that's just you taking a picture with your phone. Duplicate records are always going to be the most beneficial for you. Now, let's go over a few categories that are often considered to be very tricky topics. We're going to start with transportation. Now, as with all deductions or deductibles or deductions, there are a few um, very specific rules and guidelines that you're going to want to follow. Now, here are all the elements that you need to make sure your transportation is deductible. You must be in the regular course of doing your business and related directly to child care, like you're picking up the children, or be business related, such as going to Costco to get some milk. Now, you always need to keep personal and business travel separate. Please remember to jot your questions in the chat and we'll address them as we go or towards the end. Now, when it comes to business trips, the primary rule is that the trip can be for both personal and business purposes, but it is only deductible if the primary purpose of the trip was for your business. Now, here's an example. If you go to Costco to purchase a long list of supplies for your childcare center, and you just happen to pick up some personal items like a jar of pickles, then the trip would still be deductible since supplying your business was the main reason for going. However, if you went to the grocery store for your own groceries and you just happen to pick up the jar of pickles or whatever item that you may need for your childcare center, that trip would not be deductible since your personal errands were the primary drive. Now, the key is looking at why the trip was necessary in the first place. If the main purpose was business, it can be deductible trip, even if some personal items were purchased along the way. But if the priority was personal with just an incidental business purchase, then it would not qualify as a legitimate business expense. All right, keep your questions coming. We see them and we'll address them very soon. Now, how can you deduct these costs? Now, if you use your vehicle to conduct business for your childcare, then you may be wondering how you can deduct your transportation costs. So there are two ways to deduct your vehicle expenses. The first is the standard mileage. The second is the actual expense method. Let's talk a little bit about those. So the actual expense method captures all costs associated with your vehicle, but requires extensive documentation, including keeping every receipt and logging mileage for both personal and business use. Now, there are pros and cons. The pros of this method are that it may result in a higher deduction, especially if your vehicle is used extensively for work. However, the cons are that it may take a significant amount of time to collect and retain all receipts and mileage logs. Now, while the actual expense method can provide a larger write off, it also demands careful record keeping to track both expenses and personal use, as well as proof of payment for all vehicle costs. Alternatively, to tackle or track all expenses, your actual expenses, I'm sorry, you can use the IRS standard mileage rate, which simplifies deduction tracking, but still requires detailed log of your business miles driven. The pros of the standard mileage are ease of calculation and fewer records to collect, as you only need to track business miles, not personal miles. However, the cons are that the deduction is limited to fixed rate, which is set by the IRS, and your records may get greater scrutiny. Now, regardless of whether you use the actual expense or the standard mileage method, you still need to log um, the date, the distance traveled, location, and the purpose for each trip, specifying business versus personal use. Now, while standard mileage reduces the documentation burden, you still must carefully track mileage in a log along with the trip details to justify that documentation. Now, we do encourage you to compare the effort needed for each method when deciding what works best for your taxes. Right. So let's talk a little bit about food now. The basics for deductions for food and meals are that food is fully deductible with two exceptions. The big question is, how do you do it? Um, Children in your care are going to be fully deductible, and you can report the cost in multiple ways. For staff, only 50% is deductible. Now, for your own children, those costs are not deductible. There are two methods that you can use to deduct those food costs: actual expense and standard meal rate. Let's cover both of those really quick. So you can deduct as a business expense 100% of the actual cost of food consumed by your daycare recipients, and generally only 50% of the cost of food consumed by your employees. However, you can deduct 100% of the cost of food consumed by your employees if its value can be excluded from their wages as a de minimis fringe benefit. And that basically means benefits that you can give your employees that are lower in value and excludable from their or the employee's taxable income. Now, to simplify your record keeping requirements, there is an optional standard meal and snack rate that family daycare providers may use in computing the deductible cost of food provided to eligible children in daycare in lieu of those actual costs. Now, how is this done? It is done by keeping track of the meal type, the numbers, and multiplying by a set amount. Pros and cons. Pros are it's easier record keeping process. You can still deduct non reimbursable meals and snacks. The cons are that you still need to keep the names of each child who is eligible, the dates, the hours of attendance, and the number and types of meals that are served. Now, here's the note: the Child Adult Care Food Program reimbursement rate can be used by home based childcare providers to simplify the calculation of food costs, regardless of whether you are participating in that program or not. Now, the rate is based on Tier 1 rates under CACFP, and the provider may use the standard meal and snack rate for a maximum of one breakfast, one lunch, one dinner, and three snacks per eligible child per day. Now, this varies from what CACFP reimbursement allows, which are typically 2 meals and a snack or 2 snacks and a meal. Okay. And we do have a link for you that can be dropped for the reimbursement rates for CSCFP if you are interested in looking at those. Now, let's talk about your home. To figure out how much of your expenses are considered business expenses and what percentage of those expenses can be deducted on your federal income taxes, family childcare providers will use a time space calculation. In time space, you classify the space as either regular use or exclusive use. Now, let's look at the definition for both exclusive and regular use. For regular use, that is going to mean areas used all day, such as a play area, or part of the day, such as a napping area, but may have other uses during non business hours. Exclusive use means areas only used for the child care program and nothing else. Okay, so let's look at a few examples. Exclusive use would be having a separate basement entrance that is only used by families of your childcare business, or a storage room that only contains toys and supplies for your business. Now, on the other hand, regular use would be using your bedroom daily for nap time for the children, or using your living room every Wednesday for STEM activities. Now, exclusive use space can be fully deductible based on its percentage of total home square footage, since it is 100% for business. Regular use space is deductible based on the percentage of time that it's used for business rather than personal needs. Now, properly documenting both types of usage is key to justifying your home office deductions. Keep your questions coming. And thank you for those of you who are sharing resources in the chat. Now, home costs can be fully or partially deductible depending on the nature of the expense. Costs for exclusive uses or use areas are direct business costs, likely to be fully deductible. Now, here's an example. Replacing the tile in a basement that is only used for childcare, installing a child-sized toilet, or having liability insurance. These would be fully deductible. Now, expenses for regular use space or common improvements are only partially deductible based on the business use percentage. Examples would be replacing all of your windows, or repaving the driveway, or home insurance, since those impact the entity or the property, the entire property. Now, regular use areas, you need to use the time space calculation to determine how much you can deduct. Now, we have already referenced the time space calculation, so we'll talk more about that in just a moment. Now, the key is identifying whether a cost directly supports the business, benefits shared spaces, or is a general home improvement, to determine if it's fully, partially, or non deductible. Now, remember that in time space, you will classify your space as either regular use or exclusive use. Now, the time portion of time space calculation weighs on how much time regular areas are used for your business. Exclusively used spaces are weighed at 100% because there are no other uses for those spaces, whereas regularly used spaces are weighed at the portion of time that you use your home for business purposes. Now you can determine the time space calculation using these 6 easy steps. Step one is to determine the square footage of your regular use space. Step two is divide this number by your home's total square footage. Step three, you will determine the amount of time that your home is used for childcare. Step four is to divide the hours by 8,760, which is the total hours in a year. Step five would be to multiply the time and the space percentage. And step six will be to divide the exclusive use space by the total square footage of the home, and then add it to your results that you came up with from step five. Now, using these steps, you can easily determine how many of your expenses can be reimbursed or deducted from your federal income taxes. And we can jump a little deeper into that. Here's an example that you can attempt to calculate on your own. Now, using the steps from the previous slide, see if you can determine what the time space percentage would be here. I'll give you a few minutes to look it over and then we'll discuss it in a group. All right, keeping in mind that she has 1,500 square feet, 500 square feet for exclusive space, 700 for regular space, open 10 hours a day, 1 hour cleanup before and after, and close for 2 weeks. So let's go over it together. Let's walk through this together. So step one is to determine the square footage of regular use space. In this case, we already know that the total home is at 1,500 square feet. Um, 700 square feet are used for the regular use space. So we're going to take the length times the width to get our square footage. So to find your square footage of oddly shaped spaces, keep in mind, like if you have a room like an extra nook or it's not perfectly square, you're simply going to break that room into smaller rectangular blocks and use the square footage calculation for each block and then add those together. Okay. Then step two, we're going to divide the square footage of the regular use childcare space by the square footage of the home to determine percentage. So we're going to take that 700 regular use space, divide that by 1,500 square feet. It's going to give us a decimal point, which we can then round up and convert to 46.7%. Now note, the square footage of outdoor areas cannot be included in the time space calculation. However, external spaces that are physically attached to the home that are regularly used for childcare, such as the deck, that can be included in your time space calculation. Now, moving on to step three, you want to determine the amount of time the home was used for childcare during the year. Now, to do this, we calculate how many hours the childcare space is open per week, including the time spent preparing and cleaning up when the children are not present. Then we're going to take, or we're going to multiply this number by the number of weeks open for service, and then add any work hours that you performed while you were closed. So we know that she was open for 10 hours a day. She did 1 hour of prep and 1 hour of cleanup. So that gives us a total of 12 hours used. Then we're going to take that 12 hours per day, multiply it by 5 days per week, and 50 weeks that she was open. That will give us 3,000 hours. Step four is to divide the hours that the home was used for care by the total hours in a year. So 3,000 hours that we just got used for care divided by the number of hours in a year. For 2023, we have 8,760. And that will give us a decimal, which we then convert to a percent. So it gives us 34.2%. Now we're going to go to step 5, which is to multiply the time and space percentage. We do this by taking the square footage percentage, which we came up with 46.7, and the hours per year percentage, which was 34.2, and we simply multiply those together. So when we do that, we get approximately 16% because we are going to round that up. And then step 6 is to divide the exclusive use space, excuse me, divide the exclusive use space by the total square footage of the home and add it to the rest, the results that you got from step 5. So we know that 500 square feet was used exclusively for her childcare. So the total home is 1,500 square feet. So if we take 500 divided by the 1,500, gives us that decimal. We're going to add that 16%, which you can just convert back to a decimal. And this gives us 49.3%. So this provider's allowable time space percentage deduction would be 49.3 of allowable home expenses. Okay. All right. Hope that all made sense to everyone. If you have questions, please drop them in the chat and we'll try to address those for you. I want to talk about stimulus funding now. Now, the general rule is that any stimulus money received must be reported as income. However, you can deduct any valid business expenses associated with that stimulus money in the same tax year. Now, the timing of when the stimulus income is received versus when expenses are incurred can impact your tax situation. So let's take a look at 3 different scenarios for this. Now, here is a basic one, very straightforward. The business received $10,000 in stabilization money, which they reported in revenue, and then they spent it on $10,000 in expenses in that same year. So in this case, nothing changed on their taxes. They received $10,000, they spent $10,000 in that same year. So there is 0 tax liability for the $10,000. Now, let's say that the business got the same $10,000, but only had $5,000 in expenses. Now, in this case, you're going to have to spend or pay taxes on the $5,000 difference. So if you got $10,000 in revenue and $5,000 in expenses, we're going to be taxed on the difference of that $5,000 that was not spent or expensed. And then finally, let's assume that the business got $10,000, but as with a lot of the stabilization funding, we were able to attribute it to spending that happened in a previous year, like 2021. Now, in this case, they would have to pay taxes on all $10,000. Received money in 2023, but incurred expenses in 2022, and took off for that year's taxes. Therefore, you're going to be taxed on all 10,000 of that. All right, hope that all made sense. Now, is there any way to mitigate the last year's taxes before April 15th? So the tax year has ended. Does this mean you have no options to mitigate your taxes? Well, if you're still looking for a way to mitigate your taxes from 2023, you still have one option. Contributing to a retirement plan. Now, if you don't already have a retirement plan for your business, setting one up could provide a tax advantage. Contributions that are made to a retirement plan on behalf of the business owner and employees are typically tax deductible. Now, as a small business owner, you can open a SEP IRA for both you and your employees from January through April 15th. Make contributions and reduce your previous year taxes. You will want to discuss this option with a financial institution for more information on setting up retirement accounts. So that is one option. Yeah, and we will get to the outdoor play areas too. Now, while you may not have options other than retirement plans to mitigate your taxes after December 31st, if you find yourself with higher taxable profits than you expected, it is a perfect time for you to use that money wisely. Let's consider the following actions to make the best use of those extra funds. You could potentially pay down debt. Now, if your business has any debts, that could be a good opportunity to pay them down. This could save you money in the long run by reducing interest payments. You could create a reserve fund. Having a financial cushion can be beneficial for any business. Now, if you have higher profits and steady expenses, consider setting aside some of those profits in a reserve fund to cover future expenses or unexpected costs. You could also invest in business expansion. Now, with higher profits, you might consider investing in the growth of your business. Now, this could involve hiring more staff, expanding your physical premises, launching new products or services, or investing in marketing and advertising. Now, these investments could potentially lead to even higher revenue in the future, but please take note that these will also allow or be allowable deductions in the new year. The other recommendation is to set time for your mid year tax reviews and do that now. Now, many business owners do a tax check in, usually between August and October. Now, despite the fact that this is actually late summer into early fall, you will often refer to this as the mid year tax review. Now, this effort can be an important one since it allows you to see where your tax liability is heading before the close of the year, where many opportunities to affect your tax liability may end. Additionally, conducting a review can help you understand your tax liability since you are required by law to pay at least 90% of your actual taxes for the current year or 100% of the taxes from last year to avoid a penalty. Now, a tax review before the end of the year can help you to plan how much more you're going to need to pay in estimated taxes and to avoid paying even more penalties. Now, the review is going to involve checking your revenue and, of course, uh, the, ex- the expenses against last year's, as well as the resulting profit. That is the revenue less your expenses. So you'll also want to check how much you have paid in taxes so far. Now, this process can be as in depth as you choose, uh, from just setting or seeing if you are making money to essentially preparing your own taxes if need be. Now, we're going to talk a little bit about tax prep. So, here's a brief pros and cons list comparing paid tax preparers versus self-prepared or self-preparation to help you decide what method might work best for you and your business. For paid preparers, when searching for a tax preparer, look for someone who has been recommended by people in your network. Additionally, it's beneficial if they have childcare specific expertise, particularly with business identical to yours, if possible. Now, the pros are that you have a guide along the way for this. The cons would be that this can be expensive. So, for self preparation is often most cost effective and efficient for most providers. Additionally, the IRS tends to audit online or computer generated tax returns less frequently, as they generally find them to be more accurate and beneficial for taxpayers. Pros and cons. The pros are calculations can be more accurate and it's less expensive. Cons, the guide is an extra cost. Now, regardless if you decide to take everything to a professional tax preparer or utilize additional resources and tools to complete your taxes on your own, you should implement systems now to track your income, your expenses, and deductions to maximize your returns. Now, when you're looking for a tax preparer, for your business, you should ask the following questions. First, are they qualified? All tax preparers should have an IRS preparer tax identification number, which is also referred to as a PTIN. Now, paid tax preparers are required to register with the IRS, so be sure that you ask for this in advance, as they are not allowed to prepare your taxes without one. And you can use the IRS directory to verify preparers' PTIN and credentials. The next question is, did they have training? Ask if your tax preparer has any professional credentials. Um, Enrolled agents licensed by the IRS, certified public accountants, or attorneys, they all work as tax preparers. Other qualified preparers might be participants in the annual filing season program, bookkeepers, or certified financial planners. Now, you can search for qualified tax preparers in your area on the IRS directory, federal tax return uh, for preparers. The next question is, have they worked with childcare businesses before, or do they understand your needs? Experience counts when looking for a qualified tax professional or preparation service. Now, in addition to checking for the length of previous experience, you want to make sure that your tax preparer or the preparation service has knowledge that is relevant to your specific circumstances. Ask if the preparer is part of any professional organizations or takes any continuing education classes to stay up to date. And make sure that your preparer knows your state and local tax requirements in addition to those federal return requirements. Another question you could ask is, are they available after tax season for advice or changes? You can also ask, can you get a copy of your returns? You want to make sure that you have a hard copy of your filed returns and all documents, including your filings or included in your filings. Now, aside from the fact that it's a good idea to have a copy for your records, you never know when you might need a copy quickly. Now, while several of the online tax programs will allow you to log in at any time and print out or maybe even download a copy of your returns. Tax preparers, on the other hand, may or may not be as easy to reach outside of tax season. In addition to that hard copy of all the documents in your tax return, it's recommended to have electronic copies as well. Digital copies could be made by either scanning those hard copies and converting them to a PDF file, or by simply taking photos of the document with your phone and saving them to or on a secure device. And finally, make sure that all your original documents that were submitted to your tax preparer are returned back to you. You want to keep all your receipts, your proof of payments, any 1099s, and all of the tax related documentation for at least 4 years. All right. So if you want to complete your own taxes, there are online tax guides available for you to use as you do so. These guides are designed specifically for childcare providers who want to use online tax software. Now, we have guides available for TurboTax, H&R Block, and another program uh, as that are being dropped in the chat there. And as we have found these to be some superior products for childcare businesses. Now, the links again have been dropped in the chat for you. We also have included links with all the guides that can help you understand stimulus funds and taxes, managing business finances, and business operations. Now, these tools are free, they're easy to use, and they do include screenshots for better ease of use. Now, the Confidence and Quality Tax Rubric app was developed based on actual family and center childcare provider tax returns to help those providers to and their tax preparers to understand the specific tax regulations for childcare. Now, the rubric is designed for sole proprietors and LLCs that are single members. That is, they report their income on the Schedule C Form 1099. Now, providers with S corporations, C corporations, partnerships, or LLCs who declare themselves as S corporations can still benefit from using this app, but the expense lines will be a little bit different. Now, this app is free, it's easy to use, and we encourage you to test out the rubric for yourself to see how it works and how it can benefit your business. A link to this app will be dropped or shared with you in the chat. And we also have a proactive tax planning tool that is particularly helpful in prior years in assessments. So check those out when you have an opportunity to do so. And as we draw to a close, it's vital to reflect on the insight acquired about accurately reporting your revenue and deductions for tax purposes. Now, the next critical step is to collect your financial data for the current year and facilitate a connection with the most suitable preparer available. Now, whether you decide to tackle your taxes solo or enlist the help of a qualified professional, it's essential to take advantage of the Confidence and Quality Tax Prep rubric. Now, this tool is instrumental in maximizing deductions and minimizing risk. Now, we also strongly encourage the utilization of the tax prep guide from Homegrown Childcare, that document that we shared with you earlier. Now, please note that the review of a tax situation using the information contained within this presentation is not suitable for carefully selecting a qualified tax preparer and should not be used in place of legal accounting, or I'm sorry, in place of legal or accounting advice when it's needed. Now, let's open up our floor for questions. And I am going to ask my colleague to help me out here with the
Yeah, hi
questions.
Marlene. I have saved some questions from earlier in the chat. The first one that I'm
Perfect.
going to start with is someone who is asking about a business loan. So they ask, when applying for a business loan, will a bank or financial institution use line 31 from the Schedule C as their income, or will they use total income from Part J on the Schedule C?
So, when you're applying for, a business loan and you are it's going to be determined on, one of two factors. One, are you applying as an individual or sole proprietor, or will you be applying under your business using an EIN number, which is an employer identification number? That's going to, help you determine, but they're probably going to be looking at your total gross assets. Can you PowerPoint? I saw a question. I'm sorry, I'm not gonna watch the questions. I'm gonna let you do those, Margaret. Because they keep coming in.
Sure. Yeah, I will follow up with Monique in just a moment. We had many questions that want a review of how to claim outdoor play spaces, an attached deck, and a time space calculation. So I'm not sure if you want to do a general review of that topic.
Yeah.
We had one specific question about if a deck could be used as part of the time space calculation,
Mhm.
in addition to the square footage of the home.
Yes, it can. You include your deck as long as it's attached. The operative word means it has to be physically attached to the property. Now, if it's a separate deck and it's not connected, or if it's a playground or something like that, those do not count. But the structure has to be physically attached to the property. And that's what makes it count in your time space.
Okay, great. So I hope that answered your question about the deck. It should be measured the same as an indoor space. And if it's a
Mhm.
fixed to your home, then it can be included in your time space calculation. Bridget had a bit of a complex question in considering regulations from her local jurisdiction, in which 35% of the home square footage can be used for business use. So I would invite Bridget, if you want to expand on that a little bit more, you can come off of mute. You should be able to do so. But she says that her local jurisdiction states that a certain percentage of your home square footage can be used for your primary home for business, or can be used for primary business purposes. I think our question is, how does that come into play with our time space calculation and reporting the usage of that space?
Thank you. You presented my question well. That's exactly what it seemed like two different things, but I know Miss Marlene is going to break it all down for us.
Oh, you give me more credit than I deserve, Miss Bridget. Local jurisdiction is something that I'm not 100% familiar with because it really involves where you are. And so I am not in that jurisdiction, nor do I have knowledge on that. So I would defer that question to a tax professional, especially considering the fact that they're speaking specifically to a jurisdiction. Now, Margaret, if you want to chime in on any of that, you're welcome to. But that would be my recommendation, to consult with a tax professional in reference to that, because they are referencing some things that are specific to your area.
Yeah, I would
Sorry.
recommend for going to a professional in your locality, whether it be a tax preparer or maybe even a county official, who might be a good resource for you to get greater clarification on what that consideration might be in terms of your time space calculation.
Absolutely. Yeah, because we'd hate to steer you wrong on that. So
No, I definitely appreciate it, and I only can cite the percentage because it's actually in my license. When I got a license, it was written in black letter law. Only a certain percentage of your home can be used for that, which I understand that would be because I'm in the state of Georgia. That would be a state of Georgia question as far as filing my taxes with the state of Georgia. But I'm thinking you're giving overarching educational purposes information with the IRS. So that would
ma'am.
supersede some of the things for state, but I just wanted to see because I have heard that. I've gone to many trainings, as I'm sure many people on this call have, with Tom Copeland and others that are his surrogates. That are, and I know Civitas has some things with that, because I spoke with Mr. Gary Morano today. I had an interview with him today. So I'm aware of the different levels of things. I'm just trying to understand how we can make it work to our benefit and be in compliance.
Well, that was a wonderful question, Bridget. Hopefully the next time that is asked, I will be able to come back with some relevant content for you. Thank you. All right, Ms. Margaret, do we have another?
Another question just came in about an outdoor shed space that is exclusively used for outdoor toys for the childcare business. Does that apply at all to the time space calculation?
Outdoor spaces, to my knowledge, cannot apply to the time space unless they are affixed to the residence. And Margaret, if you'd like to chime in, you're welcome to do so as well.
Yeah, I think if that is a shed structure that is not attached to your home, then it cannot be, to my understanding of Marlene's explanation, it cannot be considered a qualifying part of your time space calculation. But if it was an attached garage space, then you may be able to use part of that in
Absolutely.
your calculations.
Any other
Por
questions?
ejemplo, yo tengo una bodega porque estoy reestructurando. Entonces yo pago una bodega mensual para tener algunas de los muebles mientras termino de reorganizar. Puedo colocar en la bodega, solo tengo la juguetería y algunos muebles, lo reestructuro. ¿Puedo colocar ese gasto?
Yeah, so that would be the same scenario as having a shed in your backyard that's not attached to your property. Now, an alternative would be to, like Margaret mentioned, could potentially store something in a garage or another unit that's
Como gasto.
attached to your property, and then the time space would be applicable in that scenario.
Pero yo digo es como gasto, porque todo me está generando un gasto tener eso en una bodega extra.
So it sounds like it could potentially be a business expense, but I would need to get more clarification for you on that. So why don't I jot that down? And then we will get back with, is it Jeanette, with a response to that question?
Bueno, gracias.
De nada. Okay. Okay. And did she actually put that in the chat so that we have documentation of that question? If not, please do so.
Bueno.
That was all I have for written questions from the chat, Marlene, but I'll open it up again in case there are additional questions that people would like to speak. You are welcome to come off mute, approach slowly because there are many participants on this call. But if you have a question that you want to ask live, now would be the time to do so.
Okay, good evening. It's Monique again. Just piggybacking off my original question in regards to the PowerPoint because it wasn't able to come up.
A recording of this presentation will be made available about 2 weeks following the conclusion of this today. We won't be posting the presentation itself, but just the recording. We have some written resources that cover various tax topics that are currently available on the Thriving Childcare Business Academy website, which I'll link for you in just a moment. But this presentation itself will not be shared as an accessible PowerPoint, just the recording.
Okay, so do you know what was the attachment that was in the email that we were supposed to view?
The only email that we have shared with the participants from this, it has been just the link to join this call. All the other links were shared in the chat for different tax resources, like the tax preparation app, the self-assessment tool, those kinds of things were shared just in the chat. I can go ahead and share them again if some of them were missed. But please just let us know in the chat which ones you need.
Okay, thank you.
Okay, I've been asking this question, but I guess it just keeps getting bumped out. But I just keep hearing about the deck as the outdoor play area can be claimed. Is it also the backyard? That's where my children play, also where my shed is, where I keep their toys, but The backyard, that is also like outdoor play, that can be claimed, correct?
So what you have to keep in mind is we're talking of time space percentage. And in order to claim an area on your time space percentage, that area has to be permanently affixed to the actual property. If it's not, then you cannot count that in your time space percentage. So if you had a deck that was attached to the back door of your house, for example, that area that you use for childcare can be counted in your time space. Whereas the playground itself, any detached properties or structures outside of that would not count in that calculation. Does that make sense? No?
Um, okay, my backyard, it is attached. I mean, my daycare is in my basement, and right outside the door, we open the door and the backyard is right there. Is like
Mhm.
attached. It's part of the property, and that's where
Right,
they play.
right. But it has to be a structure, meaning like a
Um,
building or, something that was built. So your playground itself would not count as a structure.
okay. A
Okay.
deck counts as a structure?
A shed, for example, would be a structure,
O
but
sea
it's
que
not
sí,
attached to the house or the home. A deck can be
o sea que
detached
sí
or
nos,
it can be attached. If it's detached, it wouldn't count. If it's attached, it would. So it has to be an actual physical structure that you're counting, because you have to remember we're counting what square footage within the home is being used for the children for your business purposes.
Okay.
Okay, I hope that was
o
a little
sea
bit
que
No,
si
more
uno,
clear.
it doesn't really make
o
sense to
sea
me, but I understand what you're saying, so I understand. And yes, you did answer my question. So thank you.
Okay, you're welcome.
So you can't get credit for the stuff you buy for the outdoor on the playground?
Absolutely, you can claim deductions, but that's separate from time space percentage. Time
Oh,
space is
okay.
just really calculating how much time and space you are allowed to claim within the property that you're using for business purposes. Now,
Okay.
if you purchase toys, equipment, things to that nature, you can certainly claim those deductions, and we certainly encourage you to do that. Because there's a category, and what's going to really be a helpful tool is that homegrown. There's so many resources in there. It literally outlines all of the potential deductions that you could do: toys, equipment, diapers, etc., etc. It's all mapped out in there for you. It's a really great resource. I highly recommend that you take a look at it if you have not had an opportunity to do so. It really explains things very well as far as home-based providers are concerned and what deductions you should be looking at. Any other
All right, I had
questions?
my hand raised, so I'm gonna jump on in there while there was a pause. I think where the disconnect is with a lot of family providers is that we are being told different sets of information, and it could be people that are looking to be helpful but don't fully understand the childcare industry specifically. And then as the provider, I think we are trying to look for someone to tell us what is the thing that's going to help me offset whatever my expenses are, so I can receive and not have to pay anything back. So I think
Absolutely.
it's a disconnect all the way around with what is being presented. And I understand that you're a professional representing, because you're mitigating your liability. So we need, not that this wasn't helpful, we need someone that's coming from a different angle to say, this is what I've done. These are the things that were beneficial. This dollar amount to this dollar amount can make you have to pay more or pay, just understanding what the different levers are on the tax preparation portion. And I know you cannot provide that because that is giving you risk and liability. So you are not able to do that. But I think that's what we need to hear to be able to understand all the moving parts.
So I hear what you're saying, Miss Bridget, and what I would say to that is dollar per dollar is going to be a really difficult thing for someone to say as a general statement, simply because everybody's situation is going to be different. Every single situation will be different. Your home has a different square footage. Your expenses are different than Miss Gay's expenses would be. So you just want to be very cautious about receiving information in a general context. That's another reason why we always say consult with a legal or a tax professional to get the real advice that you need so that you can successfully complete your returns and not be subject to an audit or anything like that, or even get the most return on, as you say, dollar for dollar, get the most bang for your buck by making sure that you are understanding what deductions are allowable, what deductions are not allowable, and how does that work for you in terms of the dollar per dollar assessment or analysis of your particular organization or in this home-based childcare business or whatever type of organization you're running. Does that make sense, Ms. Bridget?
It definitely does, but I know that there is a lever, a tipping point that if you have X amount of this, it's gonna have you sway one way or the other. So just being able to understand what different things are, not as a rule of thumb, to help you understand. And I don't do my own taxes, but I know in a business sense, it's following an algorithm, it's following a certain set of principles. So there is a thing that is being set. It may or may not apply to each business, but there is a set of circumstances. If this fits together, then it's going to equal this outcome because it's a math problem.
Okay. I think one example of that would be like, for example, if you are making over a certain profit in your business, for example, we gauge it at about $15,000 to $20,000 in profit. And then when you're doing that, you would benefit from looking at a different status. In other words, if you're a sole proprietor and you're interested, is that the type of information you were talking about, Ms.
Yes,
Bridget?
that's exactly.
Okay, there
Yes.
you go.
But it's
Okay.
still a set
So
of
I just
rules.
needed
It's
some
not
specifics
subjective.
there.
It's not subjective, but it's still a set of rules.
Yeah. Okay. Yeah, I get you completely. Yeah, and that makes a whole lot of sense. But we will give that, general $15,000 to $20,000, but we'll also say, but consult with a professional to make sure that you're getting the best and the best advice for you in your particular industry. Exactly. Yes. You're welcome, Ms. Bridget. I see Seema has her hand raised. Hey, Ms. Seema.
Hi, I have a question that like we sometimes give some discount to our parents, like the when they have a sibling, or we give a referral discount. In which category we can show that?
Seema, I believe hearing or reading somewhere that if you're giving discounts and things of that nature, you don't necessarily get to write that off. But write your question in the chat because I want to make sure that I give you the most accurate response to that. So write that down in the chat if you don't mind, and I will get back with you on the right response to that. Yep. And Donna is spot on with what my response was going to be, but I always tend to make sure. You're welcome, Miss Laura. Good to see you as well.
I have a question in the chat, Marlene, from Anna. She says she wants to know if health expenses can be tax deductible for home providers.
There is a category in and again, I'm going to make reference to the homegrown. It's going to tell you all the different categories where you have potential deductions that you can pull. And you're welcome, Ms. Natasha. So make sure you reference that document, but there is a category for health expenses in there Just depends on the type of expenses, and if you have employees as well, are going to be some stipulations around those. So make sure that you reference that, read that, because it's a great resource, especially if you have a home-based business. You are welcome. You know, Laura keeps saying it depends on your tax bracket. Thank you, Mrs. Laura, for chiming in. So additional resources have been placed in the chat. If you need to reference those, please go ahead and do so. Also, please make sure that your PDS number has been dropped in the chat. I am going to keep the floor open for a few more moments to make sure that we've addressed all the questions. I don't know if there were any additional questions that came across in the chat or not, but I will show you a couple of more slides here. Let me minimize my chat so I can read that for you. So we do want to thank everyone and invite you to learn more about our work in our team here at Civitas. I believe Ms. Ashley already dropped that link in the chat. But we also have a link to the Tom Copeland blog and to join our email list. And that is a great way for you to stay in touch with us. You can reach us at civstrat.com or info@civstrat.com. And be sure to visit Civitas Strategies YouTube channel for more valuable resources to support you and your business. That is everything that we have for you today. We want to thank everyone for joining us. I do have one more slide, which is a resource slide that I'll show for you all. And take care, everyone. Have a wonderful night. If you don't have any additional questions, we really appreciate it, your time. I'm going to go ahead and lower Lasima's hands here. All right. Sure. Goodness, I can't get rid of that. Oh my goodness. Why can't I?
All right, back up for 1 second, please.
Sure. What? Okay. Screen share. No. Okay, which slide did you want to see? Was it the last one?
Yes, the resource.
Okay, yes, ma'am. I'll go ahead and show
Thank
that
you.
for you. You're welcome. If I can make this, oh goodness, having such a hard time getting this out the way. There we go. On the current slide. There you are. Able to see that now?
Yes, thank you. Thank you.
You're welcome.
I have a question. My name is Claudia Benjamin. Will we
Oh,
be
yeah.
able to get those, you had like the, like a log sheet for mileage, and then there was one prior to that to write
Mhm.
down information on it. Will we be able to get those forms?
Yeah, all of those forms should be located. Excuse me. Most all of those forms should be located in the links that we dropped in the chat, as well as you can check the homegrown section in the very back has many of those documents there as well.
Okay, thank you.
You're welcome, Ms. Claudia.
Uh-oh, where'd it go? Oh, I lost it. Oh, somebody just had it up there. Oh,
Any final
Lord.
questions? Excuse me. All right. Well, we thank you so much for your time. And we hope to see you again at another Georgia webinar. Take care, everybody, and have a wonderful night.
Thank you. You too.
You're welcome.
Thank you so much.
You're welcome. Have a great night.
I did write my question in the chat though.
Thank you.
You're welcome. Have a great night, everyone.